Let's talk about Tuesday, September 23rd, 2024. This was a day on the U.S. stock market that was a total roller coaster. I mean, it started with a celebration, a brand new record high, but it ended with a pretty serious warning shot that had investors, well, running for cover.
It was a classic tale of two markets, really. The morning was all about optimism, right? The S&P 500 hit a new all-time high, and it was mostly fueled by all the excitement around AI. But then, by the afternoon, all that optimism, it just vanished. It was replaced by a big wave of selling. So what on earth happened?
By the time the closing bell rang, all three major indices were in the red. But the real story, the one everyone was watching, was in the tech sector. The Nasdaq dropped almost a full percent. That was the biggest hit of the day, and it was a clear signal that there was a lot of nervousness among the market's biggest players.
You can literally split the day right down the middle. The morning was just pure optimism. That led to that record high right around midday. Then, at exactly 12:35 p.m. Eastern Time, everything changed. That's when Federal Reserve Chair Jerome Powell started to speak, and boom, the market's direction just completely reversed.
So if you had to boil the entire day down to its essence, it was basically a battle between these two huge narratives. On the positive side, you had Micron Technology's absolutely blockbuster earnings report. This was proof that the AI boom is built on real massive demand. But the most negative story? Well, it was a single, very powerful comment from Jerome Powell that basically called the entire market's valuation into question. Let's start with that warning shot. All right, Section 1, the Powell warning shot. This is all about how just a few words can move the entire market. These were the 5 words that sent a shockwave through Wall Street. The stock market is quite overvalued. Now, you have to understand, when the head of the central bank says something like this, it's not just an opinion. It is a direct signal that the Fed is watching the market's frothiness, and it immediately made investors wonder, hey, is the party over? Which brings us to Section 2, AI boom or bubble. This is the billion-dollar debate that Powell's comment just poured a whole lot of gasoline on.
Okay, so central to this whole debate is a concept called circular investment. Let's break this down because it sounds complicated, but it's not. Imagine Company A invests $1 billion into Company B. Then, Company B turns around and uses that exact same money to buy $1 billion worth of stuff from Company A. Now, on paper, it looks like Company A just made a huge sale, but is it real, sustainable revenue, or is it just a clever way of moving money around in a circle?
And this brings us to the two sides of the AI coin right now. The whole bubble argument is centered on NVIDIA. There are these concerns about its deals with companies like OpenAI, raising these exact circular investment questions. But the boom argument has a really powerful champion in Micron. Their CEO came out and pointed to an explosive expansion in data centers as proof that the demand for AI hardware is absolutely 100% real.
All right, Section 3, key movers and shakers. Let's dig into the specific stocks and the economic data that were really in focus today.
You know, it wasn't just Powell's comments that were creating uncertainty. The S&P Global PMI, which measures business activity, showed things are still expanding, but they're slowing down. The OECD actually cut its U.S. growth forecast. And then on the global stage, you had friction from Trump's UN speech, a big overhaul of the H-1B visa system for skilled tech workers, and China just continuing to buy up gold. All of this just added to a more cautious mood.
Let's start with the day's hero, no question, Micron. After the market closed, they reported incredible earnings and gave really strong guidance for the future. And the reason? Well, it's that explosive AI demand we just talked about. The stock jumped in after-hours trading, and it really was the day's key counter-narrative to all the fear.
On the other side, you have the market leader, NVIDIA, which really took it on the chin. The stock fell nearly 3% as those circular investment concerns really started to take hold. It became the poster child for the market's anxiety about whether this incredible growth is actually sustainable.
Amazon also dropped 3%, but for a totally different reason. This was all about policy news. The U.S. government announced a major reform of the H-1B visa program. Now, tech companies really rely on this to hire foreign talent, so this policy change directly threatens to increase costs for giants like Amazon.
But hey, it wasn't all doom and gloom. Take a look at Boeing, a non-tech company that actually climbed 2%. So why? Positive company-specific news. There are reports that it's close to finalizing a massive deal with China. This just goes to show that there are still parts of the market that are moving on their own fundamentals, completely separate from all the AI drama.
And finally, there's another group of companies that are catching a lot of investor attention, Seagate and Western Digital. These are the companies that make the hard drives that store all that AI data. People are starting to see them as the picks and shovels of the AI gold rush. Their stocks have already doubled this year, but their valuations are still considered much lower than a stock like Nvidia, which makes them a really attractive alternative for some people.
So, okay, Section 4, 3 paths for investors. You've got all this conflicting information, a warning from Powell, this circular investment debate, but also real demand proven by Micron. So, how do you even navigate a market like this?
Well, based on today's action, it seems like investors are choosing one of 3 paths. First, you have the growth believer. You see all these current worries as just a blip, and you're betting on the long-term AI story with stocks like Nvidia. It's high risk, but a high reward. Second, you've got the value seeker. You believe in AI, but you're a little wary of those super high prices, so you look to those hidden beneficiaries, like Seagate. And third, there's the risk manager. You just decide to sidestep the tech volatility altogether and diversify into non-tech names, like Boeing or even gold.
Okay, let's put it all together. Section 5, your takeaway and top risks. What should you be watching right now? Despite all the short-term noise and the day-to-day drama, it's so important to remember this number. According to an analysis from UBS, AI adoption in the US is still below 10%. What that suggests is that, no matter how volatile things are today, the long-term growth story is potentially just getting started.
And that leaves the market at a true crossroads. I mean, on one hand, you have proven, explosive demand for AI infrastructure, but on the other hand, you have really serious questions about valuation and revenue quality. And those questions are now being amplified by a direct warning from the Federal Reserve itself.
And that leaves us with 2 core risks you absolutely have to watch. First, AI profitability failure. This is the risk that the billions and billions of dollars being invested don't actually generate real profits, and that whole self-reinforcing loop just collapses. And second, a Fed policy shift. With Powell now openly talking about overvaluation, the risk that the Fed decides to hold off on cutting interest rates is much, much higher than it was before.
Which brings us to our final question, and it's the one that really defined this crazy, volatile day and will probably define the market for months to come. Is the future of AI built on solid, real-world demand, or is it a dangerously fragile feedback loop just waiting for something to pop it?